Good afternoon. My name is Sheila Lamb, and I'm with the Virginia SBDC Network. For those of you that are not familiar with our organization, the Virginia Small Business Development Center is a partnership program between the U.S. Small Business Administration, George Mason University, and local host institutions throughout Virginia. With 27 locations across the Commonwealth, we provide training and technical assistance to small businesses in their local communities. Our one-on-one advising services are available at no charge. Today's webinar, IRS Guides, Withholding and Estimated Taxes, is presented by the Virginia SBDC Network and the Alexandria SBDC. We are recording today's presentation and it will be posted on our website, virginiasbdc.org. Due to the large number of participants, everyone's microphone is muted, but if you have questions during the presentation, you can type those into the Q&A box. We have also enabled the live transcript function, which you can show or hide via your own meeting controls. And now it's my pleasure to introduce our presenter for today's session, Anika Pompey, Senior Stakeholder Liaison with the Internal Revenue Service in Washington, D.C. As a stakeholder liaison, she is responsible for establishing and maintaining relationships with tax practitioners, business and industry organizations, and other audiences for the purpose of providing education and outreach on IRS policies, practices, and procedures. Prior to becoming a senior stakeholder liaison, Anika held the position of tax compliance officer. In this role, she planned and conducted examinations of individual income tax returns, and she was also responsible for educating taxpayers about tax law and tax-related accounting. Anika held the position of TCO for 7 years before becoming the frontline manager of a TCO group. She has also held the position of contact representative, where she was responsible for assisting customers with their tax accounts. Overall, Anika's IRS career spans more than 15 years. Please join me in welcoming our presenter, Anika Pompey.
Thank you so much, Sheila, and good afternoon to everyone. I want to thank you all for having me here today. So today's workshop is going to be a quick guide to federal withholding and estimated tax payments. During this workshop, we will address tax withholding from wages, estimated tax payments for self-employed individuals, estimated tax payments for corporations, and finally, we will discuss various payment methods for making estimated tax payments. Now, the federal tax system is a pay-as-you-go system. This means that you need to pay most of your tax during the year as you receive income rather than paying at the end of the year. Having enough tax withheld or making quarterly estimated payments during the year can help you avoid a large tax bill and penalties at tax time. The IRS urges taxpayers to check into their options to avoid these penalties. Adjusting withholding on your paychecks or the amount of your estimated tax payment can help you prevent penalties. This is especially important for people in the sharing economy, those with more than one job, or those with a major change in their life, such as a recent marriage or a new child. The IRS has a new pay-as-you-go, so you don't owe page, and that's to help you make sure you have enough tax payments during the year. Now, there are 2 ways to pay tax and avoid a large tax bill when you file your tax return. The first is through tax withholding from your pay, your pension, or certain government payments such as Social Security. And the second way is through estimated tax payments, which are quarterly payments made throughout the year. Now, changing your withholding or making estimated tax payments also helps you avoid interest or the estimated tax penalty for paying too little during the year. Now, ordinarily, you can avoid this penalty by paying at least 90% of your tax during the year, and we'll discuss the estimated tax penalty a little later in this workshop. There are many options for making payments, and you can find all of our payment options by visiting www.irs.gov/payments. But we are going to touch on those payment options later in this presentation as well. But for right now, I want to discuss with you all tax withholding and estimated taxes in more detail. Now, some of you might be thinking, why are we discussing tax withholding? I'm not employed, I run my own business. Maybe I'm in the wrong presentation, but I'm here to assure you that you are actually in the right place. I want to address withholding because some of you may be employed part-time or full-time and also run a business. Some of you may be business owners who are married and file a joint return with someone who is employed. And some of you may be business owners who have employees, and you can share this information with them regarding tax withholding. So if any of these scenarios apply, then tax withholding will apply to you. So life changes can affect the amount of tax you owe, and employees should make every effort to ensure that the correct tax is withheld from their paycheck. The IRS Tax Withholding Estimator is an online tool that you can use to help you determine the correct withholding. And after using the Tax Withholding Estimator tool, you can use your results to complete your Form W-4, which is the Employees Withholding Allowance Certificate. We do also have an online publication to help taxpayers pay the correct amount of tax owed. And it is available on irs.gov. You simply have to search publication 505, and that is titled Tax Withholding and Estimated Tax. Now let's get into this tax withholding estimator, because I actually really like this tool a lot. The new tax withholding estimator is an expanded, mobile-friendly online tool designed to make it easier for everyone to have the right amount of tax withheld during the year. So the IRS launched the new estimator in August 2019, and it's actually a replacement of our former IRS withholding calculator. It is part of our ongoing effort to improve quality service as we continue to pursue modernization and enhancements of our taxpayer relationships. So it offers workers as well as retirees, self-employed individuals, and other taxpayers a more user-friendly step-by-step tool for effectively tailoring the amount of income tax they have withheld from wages and pensions. So in developing this tool, we took into consideration feedback and concerns from taxpayers and the tax professional community. And in doing so, we were able to include a variety of new user-friendly features. So this slide is a summary of some of the new features of this tool. We included plain language throughout the tool to improve comprehension. So specifically, we improved the language of questions and prompts. We provided in-browser tips with summary information and links to additional resources when applicable. And we included step titles and summaries. We also added the ability to more effectively target at the time of filing either a tax due amount close to zero or a refund amount. We included a new progress tracker to help users see how much more information they need to input. The progress tracker also added the ability to move back and forth through the steps. And this allows you to correct previous entries or skip questions that don't apply to you. We added enhanced tips and links to help the user quickly determine if they qualify for various tax credits and deductions. The estimator automatically calculates self-employment tax for a user who has self-employment income in addition to wages and pension. And it also automatically calculates the taxable portion of any Social Security benefits. And we incorporated a mobile-friendly design so it can be used on all types of devices. You can use it on a tablet, a phone, or your personal computer. So those who use the tax withholding calculator will need to have a regular paycheck or pension, but the calculations have been improved to provide more accurate estimates to taxpayers who also have self-employment income by including and determining your self-employment tax. And it also helps by making taxpayers with self-employment income aware that they may qualify for adjustments for either self-employment insurance or contributions to a simple plan, or a simplified employee pension plan, and other qualified plans. And then as I mentioned in the last slide, users who have Social Security income as part of their total income, the estimator tool will now determine the taxable portion of your Social Security. Now, you can locate the tax withholding estimator tool by visiting irs.gov. It can be found on the IRS homepage, and you simply need to scroll to the tools and applications section of the page and click on the link. Before using the tool, you should make sure you have all the information that you need. So make sure you have ready your pay stubs for all your jobs, as well as your spouses if you're married and file joint. Other income information for side jobs, self-employment, investments, and so on. And also have the most recent tax return. Now, I want you to keep in mind, you cannot use this tool if you have no wages. So if you have no wages, or you're filing a joint return and your spouse has no wages, you're not able to use this tool. And I also want to add that the results are as accurate as the information that you enter. Now, after using the withholding estimator tool, you will be able, you'll be taken to your results page. This page will let you know what your potential refund or balance due will be if you keep your withholding information the same for the remainder of the year. There will be a section on this page that reads how to adjust your withholding. Now, if you click on that link, it will provide you with the information you need to enter on each line of the W-4. There will also be a hyperlink to a Form W-4. And if you click on that, the information will be auto-populated on the form. So you will simply just need to enter your identifying information in step 1. So that's your name, address, Social Security number. You can print the form, sign it, and then turn it into your employer. Now, as I mentioned previously, you can't use the tax withholding estimator if you have no wages. If you are solely self-employed, or you and your spouse are both self-employed, then you need to make estimated tax payments. And that takes us to the next segment of our presentation. Now, if you are in business for yourself, you generally need to make estimated tax payments. Individuals, including sole proprietors, partners, and S corporation shareholders, generally have to make estimated tax payments if they expect to owe tax of $1,000 or more when their return is filed. Estimated tax is used to pay not only income tax, but other taxes such as your self-employment tax and alternative minimum tax. And just an FYI, self-employment tax covers your Social Security tax and your Medicare. So you make your estimated tax payments based on the income you expect to earn and any credits you expect to receive in the year. And you can use your prior year return as a guide, and Form 1040-ES, estimated tax for individuals, has a worksheet to help you figure your estimated tax. So to figure your estimated tax, you have to figure your expected adjusted gross income, taxable income, taxes, deductions, and credits for the year. And when figuring your estimated tax for the current year, it may be helpful to use your income deductions and credits for the prior year as a starting point. So use your prior year's federal tax return as a guide, and you can use the worksheet in the Form 1040-ES to figure your estimated tax. Now you need to estimate the amount of income you expect to earn for the year. And if you estimate your earnings too high or too low, you can simply complete another Form 1040-ES worksheet and recalculate your estimated tax for the next quarter. You want to estimate your income as accurately as you can to avoid penalty. And you must make adjustments for both changes in your own situation and for any recent changes in the tax law. Now, estimated tax payments are due as follows. Your first installment for the period of January 1st to March 31st is due April 15th. For the period of April 1st to May 31st, the payment is due June 15th. For the period of June 1st to August 31st, the payment is due September 15th. And for the period of September 1st through December 31st, the payment is due January 15th of the following year. Now, you may send your estimated tax payments with Form 1040 ES payment vouchers, or you can pay online. Now, as we continue to work through our backlogs that remain from our closures during the pandemic, we highly recommend that you pay online. And I'm going to discuss the different online payment options that we have available to you a little later in this presentation. Now, I know that some of you joining us today file corporate tax returns. So if you file your business as a corporation, you are also responsible for making estimated tax payments. Now, generally, a corporation must make installment payments if its expected estimated taxes for the year are $500 or more. If the corporation does not pay the installment when they are due, it could be subject to an underpayment penalty. Now, installment payments are due for corporations by the 15th day of the 4th, 6th, 9th, and 12th month of the corporation's tax year, because we do understand that not all corporations are calendar year filers. Some of you may be fiscal year filers. So here's an example. If your corporation's tax year ends on December 31st, installment payments are due on April 15th, June 15th, September 15th, and December 15th. Now, in another example, your corporation tax year ends June 30th. In that case, your installment payments are due on October 15th, December 15th, March 15th, and June 15th. Now, if any due date falls on a Saturday, Sunday, or a legal holiday, the installment is due on the next business day. Now, in the current year and prior years, you could use Form 1120W, Estimated Tax for Corporations, as a worksheet to figure each required installment of estimated tax. And that form is what is actually included on this slide here. But as I was doing some research to prepare for this presentation today, I did learn that this form is now historical. So there won't be any more publications of this particular form after the 2022 year. And at this time, I don't have any news as to whether we are going to create a replacement for it. But there are two methods that you can use to figure your required installment payment. You should use the method that yields the smallest installment payment. Now, in method one, each required installment is going to be 25% of the income tax the corporation will show on its return for the current year. And in method two, each required installment payment is 25% of the income tax shown on the corporation's return for the previous year. Now, in order to use method two, the corporation must have filed a return for the previous year. The return must have been a full 12 months, and the return must show a positive tax liability. So there can't be zero taxes due. Now, if the corporation figures and deposits its estimated tax and find that its tax liability for the year will be more or less than originally estimated, it may have to refigure its required installments to see if any underpayment may apply. An immediate catch-up payment should be made to reduce any penalty resulting from the underpayment of any earlier installments. A corporation is generally required to use the electronic federal tax payment system to pay its taxes. And we are going to discuss that system a little later when we are discussing payment options. So if there is an overpayment of taxes, a corporation can quickly apply for they can apply for what is called a quick refund. So you would use Form 4466, Corporation Application for Quick Refund of Overpayment of Estimated Tax, to apply for a quick refund of an overpayment of estimated tax. and a corporation can apply for a quick refund if the overpayment is at least 10% of its expected tax liability and at least $500. So you would use Form 4466 to figure the corporation's expected tax liability and the overpayment of estimated tax. You would file the form after the end of the corporation's tax year, but before the corporation files its income tax return. You do not file Form 4466 before the end of the corporation's tax year. And an extension of time to file for the corporation's income tax return will not extend the time for filing Form 4466. Now, on to our next slide. We are going to move into discussing underpayments and estimated tax penalty. So we're going to start with Form 1040. So Form 1040 filers who underpay their taxes may be subject to a penalty. And this applies whether you paid through withholding or through estimated payments. So a penalty may also apply for late estimated payments, even if you're due a refund when you file your tax return. In general, you don't have to pay a penalty if you meet any of these conditions. You owe less than $1,000 in tax with the return, or throughout the year, you paid the smaller of these two amounts, at least 90% of the tax for the current year, or 100% of the tax shown on the return for the prior year. To see if you owe a penalty, taxpayers should use Form 2210. The IRS may waive the penalty if someone underpaid because of unusual circumstances and not willful neglect. So some examples for penalty waiver would include a casualty, disaster, or other unusual circumstance. Maybe a taxpayer retired after reaching the age of 62 in a year where estimated tax payments were applied, or an individual may have become disabled during the tax year when estimated payments were applied. Now, corporations, as I mentioned, are also subject to underpayment penalties. So if a corporation does not pay a required installment of estimated tax by its due date, it may be subject to a penalty. And the penalty is figured separately for each installment due date. Therefore, the corporation may owe a penalty for an earlier due date, even if it paid enough tax later to make up for that underpayment. Now, this is true even if the corporation is due a refund when it files its return. Now, corporations use Form 2220, underpayment of estimated tax by corporations, to determine if a corporation is subject to the penalty for underpayment of estimated tax and to figure out the amount of that penalty. If the corporation is charged a penalty, the amount of the penalty is going to depend on three factors. One, the amount of the underpayment. Two, the period during which the underpayment was due and unpaid. Or three, the interest rate for underpayments published quarterly by the IRS in the Internal Revenue Bulletin. So a corporation generally does not have to file Form 2220 when it with its income tax return, because the IRS will actually figure any penalty and bill the corporation. But if you feel more comfortable computing the penalty yourself, we encourage you to complete the form and submit it with your return. Now, to avoid penalty, you want to make sure you are making your estimated payments in the correct amount, and you want to make sure that they are timely. So the best method for making estimated tax payments, as I said previously, is by way of online payment. And we have several different options for online payments. They are making payments via your online account, making payments via direct pay, paying by debit card, credit card, or a digital wallet. And finally, there's the option of the electronic federal tax payment system. So this next slide covers online account. I want to talk about that first, and I do apologize for this blurry image. So you can access your individual account information using online account, and you'll have access to balances, payments, tax records, and more using your online account. Online account is only for individual taxpayers who file a 1040. But what I really want to focus on is the payment and online account. So using your online account, you can make a payment from your bank account or by debit card or credit card. You can also view 5 years of payment history, including your estimated tax payments. And you can also view any pending or scheduled payments. Now you have to register to use online account. And if you don't have an existing IRS username or ID Me account, please create an account with ID Me. You need to have photo identification ready. And more information about identity verification is going to be available on the online account sign-in page. Now, at this time, IRS does not have online account for businesses, but we are planning to develop an online account for businesses in the future, and this is going to enable businesses to easily, securely manage their federal tax obligations. Now, the next payment option is direct pay. So direct pay is a free IRS service that lets you make tax payments online directly from your bank account to the IRS at no cost. You can use this secure service to pay your taxes for Form 1040 series, estimated taxes, or other associated forms. And you can easily keep track of your payments by signing up for email notifications about your tax payment each time you use direct pay. Now, email notifications will contain the confirmation number you receive at the end of a payment transaction. But I want to remind you all to watch out for email schemes, because it seems in the recent months, the IRS schemes have been really growing. So I just want to remind you that you will only receive an email from IRS Direct Pay if you've requested the service. That means you've gone in, made a payment, and then indicated that you wanted an email confirmation. If you receive an email and you haven't made a payment, ignore it, delete it, don't open it, and don't click any links. Now, if you've already made a payment through direct pay, you can use your confirmation number to access the look up a payment feature. You can also modify or cancel a scheduled payment until 2 business days before the payment date. Now, IRS Direct Pay won't accept more than 2 payments within a 24-hour period, and each payment must be less than $10 million. So for larger electronic payments, you will need to use the electronic federal tax payment system or same-day wire. Now, direct pay is not available 24/7 because, websites have to go down for maintenance. So if you need to use direct pay, it is available Monday to Saturday from midnight to 11:45 p.m. Eastern time, and on Sunday from 7 a.m. to 11:45 p.m. Eastern time. Now, let's talk about our third-party payment processing options. So both individual taxpayers and businesses can use this option. And the IRS uses third-party payment processors for payment by credit card and debit card. It is safe and secure, and your information is used solely to process your payment. So if you use this option, you can pay online or over the phone, and you can make payments using digital wallets as well, such as PayPal or Click to Pay. Now, there's a maximum number of card payments allowed based on your tax type and payment type. And you should also keep in mind that employers' federal tax deposits cannot be paid by credit card. So for payments of $100,000 or more, special requirements may apply. Now, if you visit this page on the IRS website, you will find that there is a payment processor fee comparison chart. So just review that chart and choose the payment processor that offers you the best fees for your card type and payment amount. And I also want you to keep in mind a few things. No part of the card service fee goes to the IRS. These are fees charged by the third parties, and I would assume that they use these fees to keep the business running. Now, you don't need to send in a voucher if you pay by card. And your credit card processing fees are tax deductible for business taxes. And if you have any issues with the card payment, you will need to contact the card processor directly. That is not something that the IRS can assist you with, especially if we never received the payment on our end. IRS will refund any overpayment unless you owe a debt on your account. And just the last thing I want to mention is that if you do use a third-party processor, your card statement will read United States Treasury tax payment, and your fee will be a separate fee, and that would read tax payment convenience fee or something similar in wording. Now, the very last payment option that we have available is the electronic federal tax payment system, and we commonly refer to it as EFTPS. So this option is available for individuals, tax professionals, and businesses. So EFTPS is a free system offered by the U.S. Department of Treasury to pay your federal taxes. EFTPS is very secure, and you can use it to schedule payments up to 365 days in advance. You can pay your income, employment, tax, estimated tax, and even federal excise taxes. You can also use it to easily change or cancel scheduled payments. You can track your payments with email notifications, and you can view payment history up to 15 months. And lastly, you can receive help with payments or questions from their customer service agents. Now, some of the benefits of using EFTPS include the option to pay through the EFTPS voice response system, and you can also download your EFTPS documents. Now, you do have to enroll in EFTPS in order to use it. You can visit the EFTPS website or call their customer service to request an enrollment form. And new enrollments can take up to 5 business days to process. Now, that concludes my presentation for today, but you can learn more about the topics that we discussed today by visiting the IRS website at www.irs.gov and doing keyword searches for terms such as pay-as-you-go, so you won't owe, estimated taxes, tax withholding, self-employed individual tax center, business taxes, and so much more. Now, this slide just lists some of the forms and publications that I did mention during our workshop today. So you have publication 505, which is tax withholding and estimated tax, and Form W4, Form 1040 ES, and Form 2210. These are all forms and publications associated with estimated tax withholding and penalty for individual tax returns, the Form 1040. And then you also have publication 542, Form 2220, and Form 4466. All of these forms and publications are associated with corporate returns. Now, this very last slide includes the contact information for stakeholder liaisons who service Virginia. So there are a total of 3 of us. First person listed is my colleague, Alfred Page. He is physically located in Washington, D.C. with me, but he also services the Central Virginia area. And then you have myself, and I cover Washington, D.C. as well as Northern Virginia. And then we have Cheryl Jackson. So Cheryl is based in Richmond and pretty much covers everything south of Richmond to the south, southeast, and southwest of Richmond. So that is all I have in regard to my presentation. If you all have questions, I do encourage you all to type those questions into the question and answer box. And Sheila, I will turn it back over to you.
Okay, great. Anika, thank you. We have had a few questions trickle in. I'm gonna start with the first one, and you may have answered some of these, but I'm gonna go ahead and state them anyway, just to make sure. This first one came in very early on in your presentation. When you say the phrase "no wages," are Social Security income and self-employed income considered wages?
So that's a very good question. So when I say no wages, so wages is going to be defined as income that you earned through employment. So if you are hired and you receive a paycheck from an employer, then those are considered wages. Social Security income is not considered wages, and if you're self-employed, the money you earn from self-employment is also not considered wages.
Okay, great. Do you have any tips for estimating taxes in your first year of business?
Okay, so that's a really really good question. At the moment, I really don't have any tips for estimating your taxes. What I would do I'm not going to say that. What I would do as a first-time business owner. So when the payments are due, because we went over that in the presentation. So what I would do is just take those earnings that you make in those first few months. So if we're doing the first quarter payment that is due in June, that is from April 1 to May 31st. I would just take those earnings that you made during that period and kind of calculate the taxes on that amount. And then when it's time to do the next quarter's payments, which would be June to September, take all the earnings in that particular quarter, and then do your calculations and estimate the calculate the taxes on the income that you earned in that period, because your payment is due 15 days after that period ends. And if it's your first time, if it's your first year in business and you kind of anticipate that you might make the same as you did when you were employed in the prior year, then just you could just base it off your prior year's tax return, because you can estimate payments based on 100% of the prior year's tax return, as long as that amount is not zero.
Okay, thank you. What are the, what are the penalties for filing late estimated taxes?
So the penalty, give me one moment and I'll get you a response for that, because I can't remember the penalty rate off the top of my head, but I can look up that penalty rate for you and send that response to either Sheila or Philomena.
We'll get that out. Let's see. Next question. I have an LLC, but I am the only employee. Do I pay taxes as a business or self-employed? Does my business profit count as my personal income?
So if you're an LLC and you're the only person who works in the business, I wouldn't call yourself an employee. I would call yourself the business owner. So if you establish your business as an LLC, but you are the only person who owns the business, then you are considered a sole proprietor. Sole proprietors file Schedule C with Form 1040, and so of course you're considered self-employed, and you will be required to make estimated tax payments. Now, as far as your business profit, when you file your Schedule C, when you determine your net profit or loss, that is considered your income.
Next one. Is the only difference between EFTPS and direct pay is the only difference is how far back you're able to view the past history? Not sure about the second part of this question, and needing to enroll for EFTPS. I have that part too. Not sure about that second part.
No, so direct pay is at this time is only for individual taxpayers. So if you file a 1040, so this would be for your sole proprietors, partners, or S Corp shareholders who, in the case of the partner and the S Corp shareholder, your money, you receive a Schedule K-1 and your money flows from your business to your personal income tax return. So all of those types of business owners would be considered individual taxpayers, and only individual taxpayers can use direct pay. The electronic federal tax payment system can be used by individuals as well as businesses. And because direct pay is an application by the IRS, is probably why you can see a little longer of a payment history. So she had a follow-up question. Did she have a follow-up question?
So the second part of the question, I wasn't quite understanding. It just says, and needing to enroll for EFTPS. I have that part too.
Okay, so that is also a difference. You actually have to enroll in EFTPS in order to use that payment system. But for direct, you don't need to enroll in direct pay, but in order to make a payment, you will need to verify information from a prior year's tax return. So if you do go into the direct pay system to make a payment, it's going to have you pick a tax year to verify your tax information. And this is for security purposes, just so that no one else is like getting access to your information. And once you're able to verify information from a prior tax year, then you'll be allowed to use the direct pay system. So direct pay is not a payment option that you have to enroll in, but you will, in order to make a payment, you will need to verify some information.
Okay, so next question. What about 1099? Is that considered wages?
So if you are receiving a 1099 miscellaneous form, which is a 1099-MISC, or you're receiving a 1099 non-employee compensation, which is the 1099-NEC, those are not considered wages. You are considered to be self-employed, and because no withholding is held from the income that you earn, you are going to be required to make estimated tax payments.
Okay, so next one, I own a single member LLC. I filed a joint return with my wife, who is employed by a university. This is a pretty specific question. I filed my return in April 2022, but did not make estimated payments in 2021 and was not penalized. Should I be making estimated payments?
So you may not have been penalized. So you should be making estimated tax payments, but it's possible that you weren't penalized because the tax that you paid and when you filed your 2022 return was at least was 100% of the prior year's return. So if you maybe take a look back at your prior year return and see what your total tax was on that return compared to the return you filed in 2022, if the taxes in the prior year were less than what you paid, were at least 100% of what you paid in the current year, then that's probably why you didn't receive a penalty.
If you missed quarterly payments, can you pay all at one time on January 15th?
You can pay all of the payments if you missed a payment, but you still may be subject to a penalty.
I think that answered this next question too. Yes, I think that answered. That was a 2-in-1. What is the federal percentage rate?
You want to know the federal percentage rate, like the current rate for penalty, or
yeah,
we talk about the interest rate?
Yeah, if the person who asked that question could just elaborate, that would be great. Let's see, next question. If you retired and withholding for retirement was already withheld, and you now are gaining self-employment, how do you approach that in calculating payment? Did that make sense?
So when you are completing the estimated tax worksheet, I believe that there is a section where you can enter any other sources of income you receive and any withholding that is any taxes that are withheld from those payments. So all of that factors into calculating whether you need to make an estimated tax payment.
My LLC recently sold a house. I filed an extension. How do I file the profit estimate for the house? I am the lender for the home private funding, so I actually haven't received any of the profits yet, but they were reported on 1099-S. I don't know if you want to answer that one live or if you want to just directly answer that one.
I'm going to probably have to get back to you with an answer on that particular question. So if we can probably take that question down.
Okay.
And I could do a little bit more research on that.
Great. Okay. Let's see. I have a very small side business and file taxes jointly with my husband. Does his income impact how I calculate taxes for my business since we file jointly?
So I will say that now, if you're trying to determine whether or not you even need to make estimated tax payments, then I would recommend using, if your husband is employed and receives wages, then I would recommend probably using the withholding estimator tool, because if he in fact earns wages, but he has enough tax withheld to cover, the tax on his earnings as well as any income you receive from your small business, then you may not need to make estimated tax payments. Or then on the other end, you can also probably use the worksheet and the 1040 ES form to determine if you need, because when you say small business, it could be a few thousand, or it could be 30, 40, 50,000. So I really can't gauge how small your business is, but I would recommend that you either use the withholding estimator tool or use the 1040 ES worksheet for the income that you earn.
Okay, we have a clarification on that earlier question. What is the federal percentage rate? She's asking for the tax rate.
Okay. So the tax rates are going to vary based on the amount of income you receive. What I'll do is I will send you copies of the tax rate tables, and then just to make sure I cover everything, I'll also send you copies of any interest and penalty rates, any applicable interest and penalty rates.
Great. And this is a confirmation from the very first question about the no wages. With no wages, but self-employed and Social Security, what estimator do I use?
Use the 1040 ES worksheet.
And someone is asking if we will be sharing the slide presentation. And yes, there will be a follow-up email within a week going out, which will include the presentation. So that's all the questions I'm seeing. I think we've covered And I think we're also saving these questions in case there's any follow-up that you can give directly, Anika.
Okay, awesome. And then again, I just wanted to let all of our audience members know that you can use our contact information, reach out to us if you have any questions. We'd be happy to answer them for you.
Great. You know, one more question just popped in. There was something in the 1040 ES about penalties and filing annual tax return by 1/31. Can you clarify?
So you don't, well, I would, first of all, I would need to know exactly what you're referencing, because you don't file your annual tax return by 1/31. Annual tax returns aren't due until April 15th. And the estimated tax payment is due on January 15th. So if you could send me an email and share exactly the excerpt that you are referring to, and I would be happy to clarify that for you.
Great. I think that covers all of our questions. So I guess I will close us out here. I want to thank everyone for attending today. As stated earlier, you will receive an email with a link to the recording and the slides. If you'd like to sign up for upcoming webinars or access recorded webinars, please visit virginiasbdc.org/training. These resources are designed to be used in collaboration with the local SBDC advisors. You can sign up for a free and confidential session by emailing help@virginiasbdc.org or via our website. Thank you all for attending, and we hope to see you at the next session. Take care.
You all have a good day.